Hello and welcome back to the Dukascopy TV studio. I'm Natalie MacDonald, and joining me now to discuss where the euro is heading is Roberto Falzoni, President and founder of Dukre Asset Management. Roberto, thank you very much for joining in the studio once again.
Good morning, Natalie. Happy to be here again to discuss about the euro and see where it's heading.
The easiest way for us to look at the euro is to take a look at this euro-US dollar chart and take a peek at this relationship. It's been choppy lately, to say the least. The trend has been for the Europeans and Asians to sell it off, with the Americans stepping back in to pick it up again. With the Economic Times announcing a springtime stumble in the US recovery, do you foresee US investors becoming even more bullish in an effort to prop this pair up?
It's true. I mean, in the last 2 months, let's say that euro-dollar has been moving in a tight range between 130 and 133. So just beginning of last week, we tried to test the 130 level, which is a very important level. We could not break it, and we have a small bounce right now. I believe that more the Americans are Asian that are diversifying a little bit out of the dollar, creating this let's say this small demand for euros. I would not expect that to last for long, and let's say that part of it is also the weakness of the dollar, because if you see euro against other pairs, it has been pretty weak in the last months or so.
Bond yields are warning that the EU is heading for a rough patch, emphasised by poor Italian consumer confidence data this week, and also concerns over Spanish bank Santander's exposure to the Eurozone troubles. We all know that this rate is going to drop at some point. The question is when?
Yes, you're right. So the question is more when than if. But like always, markets are unpredictable, and sometimes, moves then can come at different time. I would stick, to my forecast that we will see the euro much weaker by the end of the year, probably dropping at least to 120 and maybe even going to parity. So I would rather, sell the euro on any rallies and add, aggressively if we break this 130 level. So I think that for the timing, we are really a lot watching at the technical. And the 130 level is really the big barrier that need to be broken. And there you can be more aggressive as a trader and add to position. But overall, I would rather stick with the weak euro, knowing that the dollar also has not been very strong. So now we are more in a risk on situation. So where markets have been pretty good, stock markets have been rising. Okay. Lately, European has been suffering a little bit more, but still, the situation is not like last year. I expect this to change maybe after French elections or Greek election, and so volatility will start to come back. And at that moment, probably the dollar will get stronger. I don't expect the U.S. economy to be that weak. My forecast is that is moving along pretty nicely at moderate pace, but in the right direction. They've been quite good in managing and, putting up as much liquidity as possible. So this is creating the good benefits for the economy, medium to long term.
The euro is becoming a black hole in the global economy. On Sunday, 1 in 5 French electors backed Marine Le Pen on a platform of returning to the franc. The largest share of the vote went to Francois Hollande, who has promised to abrogate the FU treaty. And with countries outside of the Eurozone, such as Japan, now being forced to dip into their own budget in order to support the Eurozone firewall, propping up the euro is becoming a no-win situation, really, for governments, isn't it?
Yeah, let's put it this way. My view is that why we need to prop up the euro. I think that one of the solutions for Europe will be to devalue the euro. So we should have a much weaker currency. So if the euro against the dollar could be 120, 115, or even go down to parity, it will help a lot, especially peripheral Europe. So we could export out, and so going for more pro-growth measures. And not these austerity measures that are killing, let's put it this way, especially peripheral countries. And of course, Spain and Italy now are at the forefront, even if we don't have to forget Greece. Greece election on the 6th of May are going to be very important, and the outcome could really change the situation for Greece and maybe pushing it out, even if we are not talking about so. But I'm more worried, of course, about Spain and Italy, which are bigger countries with a huge debt, especially Italy. And these measures that are maybe good, for the long term about austerity, but in the short term are killing the economy, killing, the willingness of Italians to go out and spend. And, this is what made Italy, going out of these 2008, 2009 crisis better than other countries, because people were still spending, and putting some of the reserve to work. Right now, taxes and a lot of controls, they're putting really a big cap on, also psychological cap, which is not good, for the economy to recover. So, to reduce the deficit, you have two ways. You can, cut spending or reduce, but if you have less income, the deficit will not be reduced. And the problem of interest rates. I mean, of course, we cannot support these kind of interest rates for long. So I would say, my advice to politicians or to central bank in Europe is more push down the euro. I mean, we don't need a strong euro. I mean, US first and Japan later, beginning of this year, they've been showing the way. They try to have a weaker currency. So that's the way.
Roberto, thank you very much.
Thank you.
Roberto Falzoni there from Dukre Asset Management. We'll be back shortly with more exclusive interviews. Goodbye for now.